Hello everyone, I'm Yuji Kawada, Deputy Director of the Japanese Financial Service Agency. Today I'm moderating this session. So first of all, I would like to thank you all for joining this session today. In Poland and in France, it is very early in the morning, whereas it is very late at night in New York. So I would like to express my biggest gratitude to all the panelists for today's sessions. So please let me briefly introduce three remarkable speakers from around the world. Roberto Patalano, Deputy Head of Division in OECD. He manages the OECD's Committee on Financial Markets and directs the division's work on global financial market, digitalization of finance, and sustainable finance. Welcome, Robert.
Thank you.
Next speaker is Jacek Czarnecki, Global Legal Counsel at the Maker Foundation. He is responsible for global legal matters and public policy at Maker, and he is also an active participant in several international blockchain initiatives. Thank you, Jacek.
Okay. Hello, everyone.
Okay, and the final speaker is Wright, a famous professor at the Benjamin N. Cardozo School of Law. He directs the Cardozo blockchain project, and he has lots of publications. His first book, Blockchain and the Law, attracted much attention in this field, in this emerging field. Welcome, Aaron. Okay.
Thank you so much.
Thank you very much. So the idea of this session is that after three panelists' brief introductions, I'd like to ask two questions to all the panelists, highlighting the opportunities and risks of DeFi. Okay, so to begin with, I would like to ask each panelist to introduce himself or say some kind of introductory remarks for about 2 or 3 minutes. Starting from Robert, followed by Jacek and Aaron. So, Robert, good morning.
Good morning.
Thank you. Could you please mention an introductory remark for about 2 or 3 minutes, please?
Sure. And at this point, should we be talking about the benefits and risks or just high level?
Please, just high level is enough.
Sure, absolutely. So I'm Rob Patalano. As you said, I managed the Committee on Financial Markets at the OECD, and before that was at the Financial Stability Board in the New York Fed for a number of years. And the remarks that I will be making today are my own, but of course they will span some of the experiences from those institutions. I think that the experience that we've all had looking at alternative forms of finance in the post-crisis era, moving from market-based finance and now moving into the virtual world of crypto assets has been fascinating. There are a lot of potential benefits, and of course they bring risks. And some of the discussions that we'll be having today and then like to focus on is better understanding exactly the virtual forms of traditional finance and how they've come about, what type of activities they are, if they're parallel or very different than these traditional forms. And I think we can say the answer is yes, that they are different in some fundamental ways, how they interact with technology and what the implications are. And this is just getting away from the use of finance by individuals and institutions, but really thinking more broadly about the architecture of the financial system, implications for monetary policy, and then the need for a rethink of regulation in this area to make sure it flourishes and that it's safe for all who use it. Why don't I end it there?
Okay. Thank you, Robert. So next, good morning, Jacek. Could you please mention some introductory remarks or introduce yourself for 2 or 3 minutes,
sure,
please?
Of course. Morning, everyone, and thank you very much for having me here. You know, my reply when asked to appear on this panel was that I would of course do that, no matter what time would be right now in Europe, because it's just important. And now, why is it important is that I think that this panel represents the crucial type of dialogue that we should be having right now. Because look at our individual profiles. We come from academia, business, international organizations, and also from a regulator. And this is exactly this type of discussion that should be happening now in light of all the market developments that we are seeing and the development of DeFi that we are going to discuss today. So thank you very much again, and very happy about this opportunity.
Okay, thank you very much, Jacek. So finally, good evening, Aaron. Sorry. Thank you for joining this session. Could you please say some introductory remarks?
Yeah, thank you so much. It's really an honor to be on this panel, and I think as Jacek and Robert also indicated, what we're seeing with blockchain technology, and in particular in the Ethereum ecosystem, is a continuing development of what the broad vision of this technology is, which is to not just serve as a means to transfer digital assets, but begin to structure the transfer of those digital assets in much, much more complex ways. And that's really the focus of my work, which is to, as a professor at Cardozo Law School, to look into these questions, to think about some of the risks and opportunities, as Robert mentioned, and to try to come up with ways to address the newer forms of how this technology is being implemented so that it can be squared with either existing regulatory systems or in ways that we can begin to construct new approaches to regulating this technology. And so I'm looking forward to describing and discussing the opportunities and the risks as part of this panel.
Okay, thank you very much. Thank you very much for great remarks by all the participants. So now moving on to the first questions. Looking back to 2 years ago, it was like if of the movement of DeFi or decentralized finance. At that time, of course, there were several decentralized exchanges, such as the IDEX or the WavesDex. However, the liquidity was fairly limited, and there was not so much attention from the wider community. However, during these 2 years, we have seen explosive growth of DeFi, and we have now a variety of DeFi applications, including MakerDAO, Compound, Uniswap, and DYDX. So as a first question, I'd like to ask each panelist about any thought on the opportunities and challenges of DeFi for about maybe 6 or 7 minutes, but you can talk as much as you can. So starting from the Aaron, followed by Jacek and Robert. So Aaron, could you please explain a brief overview of DeFi to the general audience, and also gives us your views on opportunities and challenges? Maybe, for example, challenges, legal challenges that DeFi players may face, or whatever you want. So
yeah, absolutely.
Okay.
Yeah. So as noted, decentralized finance, also known as DeFi, it's probably one of the fastest, if not the fastest, growing part of the blockchain ecosystem at this point in time, and it's happened like we've seen in other use cases for blockchain technology. We've seen it grow incredibly fast in an incredibly short period of time. And at their core, DeFi protocols use a technology called smart contracts to create financial services and other products that aim to be non-custodial in nature. So they ideally do not rely on one central party. Instead, they're using the smart contracts, usually one or more smart contracts, in order to facilitate a financial activity without the need for the central party. But today, in practice, many still do. But that's the goal. There's lots of jargon related to decentralized finance. So these applications are often administered via online portals called dApps. They're often supported by individuals who pool together their assets into liquidity pools. Those that deposit their assets into liquidity pools lock their assets and often earn fees and or automatically receive digital assets in the form of governance tokens. And the practice of submitting assets to DeFi protocols is increasingly referred to as liquidity mining or yield farming. I think taking it up a notch, what we're seeing emerge is that digital assets are developing a yield curve, an arguable basis for value, which is dependent on the time value of locked assets. And those locked assets have grown exponentially over the past year in particular. So as of today, there's $14 billion in locked assets, and most notably, $2+ billion in Bitcoin that's being locked on Ethereum or used on Ethereum, and a yield is being generated off of that. So the landscape of DeFi is emerging, and it's emerging quickly using these smart contract-based systems. So we're seeing DEXs, which were mentioned before, but also borrowing and lending protocols, which also oftentimes anchor, and I'm sure we'll talk about this, stable coins. We're seeing derivative and synthetic asset protocols, insurance, prediction markets, and we're also seeing an entire ecosystem being built on top of these protocols that serve as kind of an aggregation layer. So there's DEX aggregators and yield and asset management protocols that are emerging. DEXs are probably the most mature, and at least from a U.S. vantage point, some of the DEXs are actually surpassing more centralized exchanges like Coinbase in terms of daily volume. And it's pointing towards a future where trading may be increasingly pool to peer. So instead of going through a centralized exchange or an order book of some sort, you can use these decentralized protocols, which rely on automated market maker formulas to begin to facilitate trades. So the benefits here, there's many of them, right? There's potentially lower costs, a higher degree of security, and potentially over time privacy, as more privacy-preserving technology is kind of baked into these protocols. There's greater accessibility because it's available to everybody online, which could lead to greater financial inclusion. There's also the hope of having community-run financial infrastructure supported by a community that's governing these networks. So think of financial protocols that operate a little bit more like Wikipedia as opposed to being administered by a corporation. They're permissionless, which cuts both ways, but can be seen as a potential benefit. And they're also interoperable and composable. So since it's all software and it can all talk to one another, it works seamlessly together. That being said, there's lots of risks and challenges. It's not mature yet. It's very difficult to interact with decentralized protocols if you're not familiar with blockchain technology. So there's quite a steep learning curve. And there's obviously a number of regulatory challenges. And those regulatory risks are not going to be surprising for lawyers or other folks that operate in the financial services industry. There's commodities laws issues, particularly protocols that are aiming to create something like an option or a derivative or something in that vein. There's securities laws issues, particularly for projects that have governance tokens in some capacity, whether or not they'll be classified as securities or non-securities is still an open question. And obviously, there's lots of AML, know your customer compliance issues, especially since many of these are permissionless. So this all kind of roots down to a question, assuming that a number of these projects are decentralized, i.e. there's not one central party running it, who should be responsible for these regulatory requirements? Should it be the software developers or the parties or folks that deploy the smart contracts? Should it be the participants in the pools, those that are providing liquidity? Some have even argued recently in the US that it may be the node operators or the people running the network. Or should we push the responsibility onto centralized parties that aggregate or facilitate transactions? So there's lots of open questions, lots of looming issues, and obviously lots of opportunities that I think folks are curious about exploring. So
okay,
I'll stop there.
Thank you very much. Thank you, Aaron, for your quite comprehensive remark. Thank you very much. Jacek, as a well-known DeFi player, could you give us your view on the opportunities, maybe from the DeFi player perspectives, and if possible, how your organization facilitates the development of MakerDAO while reducing the several legal or technical challenges?
Of course, thank you. And just in continuation of Aaron's words, I think that it's really important to spend a moment thinking about the basic word that we are discussing now, DeFi. It's already a buzzword, right? So we are not spending too much time on thinking what's behind it. But a year ago or 2 years ago, actually the equally often used term was open finance. That many people were referring to this type of phenomenon. And I think that this is really important to say that decentralization is not the only feature or not the only value proposition behind this market or this industry. And that was mentioned by Aaron already, but I think that this is where we can see, or where the opportunities of DeFi stem from, so that we have something that is open, that is also permissionless, that Aaron mentioned, but also that is secure, that is composable, again, something mentioned already, and that is also transparent. And out of those value propositions, you can see that at least some of them should be of extreme interest of policymakers and regulators, especially the security and transparency part, but also the openness part. We can see in many countries, in many jurisdictions around the globe, we can see measures taken in order to improve this, these measures of the financial industry, like PSD2 in Europe, adopted in order to open some financial products or financial networks to others, or transparency crucial on capital markets, where the fight with information asymmetry is like one of the core features. And those value propositions are kind of embedded in DeFi, right? These are like a kind of natural features of this industry and this trend in finance. Now, what is crucial is that all of those features, they apply to those fundamental networks or protocols. Those I sometimes call them open and permissionless settlement networks or settlement protocols, right? Those basic networks, which are usually indeed decentralized, permissionless, they are open, secure, etc. Now, what we are most often discussing is various applications that are built on top of those networks. And those may follow the spirit of, or this philosophy of building decentralized, permissionless open products, but some of them are a little bit more hybrid, right? So you have this opposition between decentralized finance and centralized finance, but indeed you have a lot of in between, and this is a particular challenge that I would highlight to figure out very often at very specific cases whether it is actually decentralized or centralized or where it's based, looking from the perspective of various regulatory regimes. Now, I think that what we should be focusing on is not those aspirational decentralized finance, but the actual decentralized finance. And this is where I can get to your second question, which is about how the Maker Foundation is approaching or seeing those issues, because this is, our approach is really to focus on building a truly, or contributing to building a truly decentralized ecosystem. And our role in this ecosystem should be could be compared to this of the Ethereum Foundation, which is more of like a coordinating activity and a development and education funding activity with respect to Ethereum, which is a completely decentralized system. And a very similar philosophy is followed by the Maker Foundation. So we are not MakerDAO. MakerDAO is this decentralized ecosystem that is governing the Maker protocol, which is taking care of themselves in a way, because it's completely independent, separate, and also self-sustaining at this point. And of course, that doesn't mean that there are no legal challenges. Of course, they are. But I think that what is really crucial is to be draw these boundaries really clear. So really be really clear about where you are talking about something that is actually decentralized, and where you are talking about some centralized features that may also be discussed with the regulators. And this is kind of our approach. We want to engage in this discussion and educate and be really clear about where those boundaries lie, and how we can approach this from a regulatory perspective, which I believe we'll also further discuss later on.
Okay. Thank you, Jacek. Thank you very much for your very insightful comment. Okay. So finally, Robert, as an experienced global policymaker, could you please give us your view on the demand and the opportunities of DeFi? And also, could you give us potential risks or regulatory concerns from the wider perspective, including financial stability, consumer investor protection, and competition?
Yes, and Kawada-san, thank you so much for inviting me to this panel. And I agree with Jacek that bringing together our four respective areas is really what it's all about. It's very important to have these conversations and also to understand where some of the challenges may lie in the future to unlock the benefits. So what I would like to do is to talk, as you said, about some of the benefits and risks and policy implications. And I would like to begin the discussion with the Financial Stability Board framework that we were at the OECD as a member of the Financial Stability Board, as our regulators and central bankers across the world. And I think this is useful for two reasons. One, it's a simple framework. And two, it was created during the Japanese presidency a little over a year ago. And one would argue that some aspects of DeFi have really morphed since then that make us need to think about it in a forward-looking way. So I would say that if DeFi is thinking about decentralized financial instruments, mostly used to trade and build leverage upon crypto assets, and this really departs from traditional finance. We have to think about the ways how, and the FSB document laid it out. Payments, trade finance, P2P lending, and of course, capital markets through tokenization. And it's that last one that I would like to talk about today, because that really has had some explosive growth and impressive benefits and opportunities, and my co-panelists here have described those benefits. I will simply say I agree with those potential benefits, but I think it would behoove me to talk a little bit more about the risks and financial stability implications. Now, of course, we need to be forward-looking to really capture the nature of this discussion. So if I get beyond where the market currently is, let's at least appreciate this trajectory. So I would say that there are a few risks the FSB had mentioned too. First, the concern over the potential for collateralized borrowing, which could contribute to procyclicality. And the second is that the growth of DeFi could lead to some important areas of concentration that might have to do with control over source code, crypto asset mining activities, et cetera. So why don't we start with that, and I'll list 4 to 5 areas, and then we'll allow for further consideration. First, we have to acknowledge the phenomenal growth of crypto asset ownership and the market cap, even over the past year. Right, there was a peak with Bitcoin, a crash, and then of course, in part due to monetary policy and fiscal policy, in response to the unfortunate issue with COVID, has put a lot of liquidity in the system, and you're seeing a lot of assets, securities and real assets that are forming a bubble, and of course, a portion of this liquidity now is moving to the DeFi world and causing what could arguably be open to interpretation, some bubbles in that area. And this could set the stage for wider price swings, which of course is a financial stability concern. Now, the second issue is about relatively the use of leverage. I can appreciate that there is certainly collateralization and high levels of collateralization in the borrowing that's allowed within DeFi, or that's accepted within the DeFi space. But notwithstanding the collateralization, there's still certainly room for a lot of leverage, and you're seeing the transformation of the instruments in DeFi creating high levels of leverage and fast-moving assets. So when I see that, I start to think, okay, this isn't traditional finance per se. This is market-based finance, and getting into some of the complexities. Whether it's transparent or opaque, we could debate, but it's getting into some of the complexities that we see in market-based finance and that have triggered a large amount of regulatory responses, regulatory reforms from the G20 over the past decade. So we should have that in mind, that do all of these reforms apply to these new activities? I would say not yet. Maybe in concept, but in practice, it's hard to pin down. The third issue has to do with the new forms of pooling of assets, right? So to get additional fees, the pooling of assets into accounts, and that has benefits and risks. But I would say when you're looking at yield farming, perhaps one could compare this to some of the structured collective investment vehicles. I know the structures are different than CLOs, but they're thinking of pooling assets together, locking assets, creating some sort of yield curve, playing with liquidity transformation. Well, that too has received a regulatory response over the past decade, and for good reason. And we're already seeing that that regulator is are turning to forms of market-based finance that are creating runs on liquidity. And the question I would have is there a potential for runs on liquidity in the virtual world that could spill over to real assets and household income and could spill over to the real economy? If yes, then we may have some challenges on our hand. Fourth is the false comfort of trusting the technology to self-regulate. And perhaps I'm getting ahead of myself here, but that's my interpretation. With a lot of these smart contracts, one gets the impression that the regulatory aspects and even some forms of monetary policy are addressed in the smart contracts because they self-regulate, the mechanisms allow for liquidity to be created or destroyed, and perhaps that works under normal circumstances. But the question is, under severe stress, does that lead to some outcomes that actually amplify risk, and where additional policy tools might be needed to make sure it doesn't spill over to the real world, to real markets and the real economy? And then lastly, I'll leave you with this. A year ago, the G7 was alerted, as we all were, to the creation of a global stablecoin, one global stablecoin that consumers would have access to and would have the possibility to allow consumers to take their money out of traditional banks and put it into a stablecoin that they could use for multi-currency accounts, whether they need that or not. What's happening in DeFi, I think, really is provocative because it brings an enormous amount of potential benefits, but also the risks associated with the leverage, with the pooling, with the pro-cyclicality are higher, and that creates implications for monetary policy transition. So if central bankers and regulators around the world had such a swift response to one global stablecoin, and there are already now new regulatory construct framework in place at a global level, what does it take for DeFi to trigger that same response? Bubble, leverage. If there's one crash that affects the financial system, the real assets in the financial system, it will bring a lot of scrutiny. And I think the question is a matter of when. So I will leave it at that. Kawada-san. Thank you.
Okay. Thank you, Robert, for your very insightful comment, insightful suggestions about the nature of DeFi. And also, thank you for explaining regulatory concern to very easily understandable to the audience. Okay. Based on the discussion so far, now moving on to the last questions. As all the panelists mentioned, there are a range of challenges that need to be addressed, especially in the DeFi space. So the risks, as Jacek and Robert mentioned, the risks may further be amplified by being combined with the other concurrent trend, such as the Ethereum version 2, Taproot senior signature in Bitcoin, or the global stablecoin like DM, the name has changed, or the central bank digital currency like ETH and Y, that is a digital yuan, and G20s are enhancing cross-border payment. So there are lots of movement is going in parallel. So with that in mind, I will ask each panelist about his view on the possible measures to address the challenges of DeFi, to strike a balance between a potential benefit and risks for around 2 or 3 minutes. But of course you can, please, of course you don't care about the time limits. So starting from the Robert, followed by Jacek and Aaron. So Robert, thank you very much for giving us your regulatory concerns. Based on your comment, could you give us your view on the possible measures to address those challenges, or other policy implications of these measures, or how international organizations such as OECD can help countries or DeFi communities to help address the challenges? Sorry, I asked too many questions, but please.
No, I will try to answer all three within 3 minutes. Thank you, Kawada-san.
Thank
From
you.
Aaron and Jacek, their smiles. I'm sure they have a lot to say, so I try to keep it fairly brief. So I'll do it in a different order. I will first look at the policy implications of what we discussed, leaving off from the stablecoin discussion. I'll basically say that the FSB has put out policy guidance, and we've been a part of that. And that's wonderful. That addresses the financial stability concerns of stablecoins at a very high level. But it doesn't address a lot of issues. That was really about just cross market risks. But I would say that when you're getting into issues of competition, issues of taxes, issues of consumer financial protection, et cetera, data security, there are a lot of issues that it acknowledges have not been addressed. So I think the international community, regulators need to address those issues. And I will start at a very basic level. We've even here on this panel, we've talked a little bit about interoperability and governance. I think that for blockchain and DLT, more needs to be done in this area in a positive way, just to create a better playing field for interoperability, governance. So the OECD, excuse me, the OECD is working on policy guidance on that area for global standards for interoperability, governance, transparency and accountability, digital security, and data privacy, among some other areas. And this is important just to make sure that all of the players in the community are comfortable that the infrastructure that's being built in a decentralized way works. That's quite important, particularly with these levels of liquidity and leverage. Again, getting back to sort of market-based finance, or the old word shadow banking, just to make sure that we do have a transparency that works right. And then the second issue is turning to DeFi again, where the central decentralization has taken on forms of market-based finance. We need to address the excessive leverage and liquidity. And I might turn to things like the IOSCO has frameworks in the traditional world. And it's very easy to say, well, the frameworks are there, different jurisdictions can apply them. Well, I think what regulators are finding challenging is to really identify exactly what those activities are and what the risks are from the activity as they're moving very quickly and they're transforming, and to try and put them into the current regulatory framework is challenging. So what we do as an international organization of my committee is we bring central bankers, regulators, finance ministries together to discuss these issues. And in fact, we've created implications for regulation with respect to tokenization of assets. And we're looking at different case studies around the world to better understand how regulators, even with some similar regulations, are trying to apply those to different forms of tokenization and DeFi. So I think further work in that area is important to really understand what these risks are and how the regulation should apply to them. And of course, as our panelists mentioned, some of those activities have changed so much that it's hard to know who the regulation applies to, and getting that right is a challenge. I would also say that as we're creating a toolkit for regulators at the OECD, I would just throw out that the European Commission's recent MiCA legislation on crypto assets gives us a glimpse of how a body can say, yes, we are tech neutral, but given that the technology empowers activities that can create some new risks, let's try and tailor legislation for regulation to try and address some of those specific activities in a way that gives us comfort that the risk can be addressed, particularly if they become financial stability risks. And then lastly, I would say, perhaps this is for next year's conversation, but I think even a year, 2 years from now, we might be talking about re-DeFi, which is the re-centralization of digitalized finance. Because I think, and from what I'm reading, there are some aspects of decentralized finance, in order to regulate them appropriately and to understand their impact on monetary policy, there may need to be a re-centralization so that regulators and the industry can interact in a constructive way without undermining the benefits of the decentralization with respect to speed, cost, et cetera. And I would say that one area that's quite interesting is with the DFMI, the decentralized financial market infrastructures. There may be opportunities there to re-centralize into MFI certain activities, code, governance, et cetera, a way to get regulatory comfort and regulatory oversight without undermining the many potential benefits that are being discussed today, including on this panel. Let me end there. Thanks very much for the opportunity to review these issues.
Thank you, Robert. Thank you very much for your very creative ideas. I've never thought of the DFMI before, so it's very interesting. So, Jacek, could you please give us your view on the possible measures and how DeFi player can contribute to those measures?
Absolutely. Thank you, Kawada-san. And you're very kind with respect to time that you're giving us, but I think that we are coming to an end. So let me just limit to one comment on this, which I think is most crucial. I think that the situation at this current panel is great, but very specific at the same time. Because look, we are, as Aaron from academia and myself from, let's say, the business side, we are discussing with a representative of the probably most sophisticated regulator in the world with respect to those matters, and absolutely the best international organization with regard to dealing with those topics as well. And this is based on my experience with many jurisdictions and a couple of international organizations. But this type of, like, this level of sophistication, knowledge, and experience is not equal across all the jurisdictions. And I think that this is really crucial because in many countries around the globe, but also among many policymakers and also market participants, there is a huge knowledge gap and also sometimes lack of ability to connect meaningfully with respect of this type of conversation. And I think that this is something that is very much needed because we are dealing with extremely complex topics which are not free of risks, that's for sure. And all of those risks, especially outlined by Robert, they really apply. And especially with this, in this ecosystem of projects that are either fully decentralized, hybrid, or even just, centralized, but just in some way using the smart DeFi, that's very, very difficult to come up with some conclusions. And we see a lot of confusion at the moment. Based on, from the market, but also in this policymaking discussion. I think that one good example is the recent discussion of around self-custody in some specific countries, but also at the international level. There is really a lot of confusion that is not stemming from the complexity of the topics itself, but rather from some perhaps misunderstandings or lack of appropriate dialogue. So one measure to finish at this point, one measure is really, I keep mentioning this, but this is crucially important, to keep this conversation going and to participate in various initiatives that bring various stakeholders together to discuss and come up with solutions. And I can mention two such initiatives. One of them is the current initiative organized by the World Economic Forum around this topic, really bringing together various representatives from all possible sides, having them together to discuss those matters. And there is of course many others, but the other one that I wanted to mention is the one that is organized by your colleagues, Kawada-san, and focused around the multi-stakeholder approach to blockchain governance and regulation, and in particular DeFi governance and regulation. And I think that this is the way forward because there are many unknowns, many things that we haven't figured yet, but this is the only way that we can move forward among the, and build trust, which is also, that's a kind of a paradox that we are talking about technologies that are trustless, but at the end of the day, what we all have to do, and this is certain tasks, is to build trust among ourselves so that we can come up with meaningful solutions.
Okay, thank you very much, Jacek. So I would like to ask you, Aaron, but I'm sorry, the time is running out. So so now let me once again say great thanks to Aaron, Jacek, and Robert for participating in this session from overseas. And please give a big applause to the all three panelists. And thank you very much for this fruitful discussion today. Thank you very much.